Headlines were everywhere, but now it's official, we are in a recession.
The law of gravity hit Wall Street today and financial markets around the world for that matter, as stock prices plunged even more than they did on Black Tuesday of 1929.
Recessions. Markets losing money, stock market is down, real estate goes down, unemployment, thousands losing their jobs.
Around the world, stock markets fell faster than a skydiver without a parachute.
Businesses going out of business, fear bankruptcies, life savings are lost, pensions vanish.
At Lehman's European headquarters in London, they're carrying out their careers in boxes.
Nobody wins. But that's not true. If recessions were so bad, why would Warren Buffett say that he wishes for more recessions? Massive companies like Disney, GE, IBM, HP, FedEx, Microsoft, Airbnb, Uber, Instagram, WhatsApp, Groupon all started during a recession and are thriving even today. While some see recession as a period of turmoil, others see it as a golden opportunity. If you are as curious as I am and also want to profit from the recession, watch this video till the end. So in today's video, I wanted to talk about 4 things, and it's actually a step-by-step process. Step 1 is understanding the rules of recession. Step 2 is preparation. Step 3 is the collapse, and step 4 is profiting. So is Canada in a recession? And the answer lies in all the news articles that you have been seeing. Now, a technical definition of recession is that if there are 2 consecutive quarters of negative GDP growth, then we are in a recession, and we saw 0% growth of GDP for the second quarter. And that basically means that we are on the brink of a recession now. Besides, the GDP numbers have not grown since May, and that's not a good sign. We have also seen layoffs happening not just in the tech sector, but other sectors as well. And RBC has projected unemployment rate to reach 6.6% by 2024, and they are expecting insolvencies to jump by 30% over the next 3 years. And we have also seen a lot of big retailers going out of business. It started with Bed Bath & Beyond, and we'll probably see a lot more of that happening in the next couple of years. So the question is, what causes a recession? And the answer is, we don't know, because the economies are so complex that anything can trigger a recession. And in 2008, it was the subprime loans that were given by banks to people who did not qualify for loans. And this time it's a mix of COVID and a lot of money being printed out of turn. And on top of that, we had a couple of wars that is not helping our cause. Now that we understand recession and know that we are going into one, let's understand the rules that surround a recession. The first one is nobody can predict or time the market, because if we were able to do that, everyone would be a millionaire. Now, yes, we are going into a recession, but we don't know where the bottom is. Is the real estate market going to crash more? Probably yes. But can we wait to enter the market till we hit the bottom? We don't know. We just don't know where the bottom will be hit. So for instance, I invest in the stock market every single week. Should I stop investing into the stock market because the recession is coming and I know the market is going to go down? Probably I can, but it's very difficult to time the bottom and where to enter next. And therefore, I have stopped timing the market. That's rule number 1. Rule number 2 is the market will bounce back. Even if you buy at the peak, and I'll actually show that with a graph, even if you buy at the peak, long term, 10, 20, 30 years, it would not matter. And one thing that we have learned in a recession is, yes, the markets go down, all asset classes go down, but good asset classes and good companies and good investments always bounce back. And number 3, and that's probably the most important thing, is you need a money plan. Even if you have $500,000, $1 million, if you do not have a money plan of how you're going to invest in a recession, all that money will be of little use. We'll touch upon these in the subsequent slides as well, but let's understand the second point, which is preparation, and I'll talk about that in my context. The first one is stop spending. So me and my wife make it a point that every first Sunday of every week, we actually look at our expenses from our last month and make sure that we are not spending money on things that we don't need. Budgeting is really important in any market, but especially in a recession, you need to know where your dollars are going. Yes, there is Black Friday coming, but do not spend money on things that you do not need. Only buy things if they are absolutely necessary. The second part of preparation is build up capital. If you are in a job right now, maybe start a side hustle so that you are able to get a couple of $1,000s more every single month. Now, I understand everyone who is watching will not be in a position to do that. But what me and Simran did last year was that she changed to a contract job and I doubled down on my business. And any excess capital, because we were not spending any money on anything that we didn't need. Any excess capital we actually have in our bank accounts right now to capitalize on the recession. It's really important right now, if you are sitting on cash, to keep sitting on cash and be patient, because there will be enough opportunities that come your way in the next 6 to 12 months. And in case you find yourself in a situation where you do not have enough cash, that's okay too. As long as you have good income, you'll still be able to capitalize on recession, especially if you want to dollar cost average into the stock market. The third part of preparation is avoiding debt. No unpaid credit card bills, no line of credits, no expensive cars right now. And the fourth one is building up your credit score. And that's very important, because when the opportunity strikes, when you have to buy a house, you need to make sure that you have enough credit in order to buy that house at a discount. And last but not the least, educate yourself. You watching this video means that you want to educate yourself. Educate yourself on different asset classes. Should you buy gold or not? Should you buy real estate or not? When should you buy real estate? What kind of real estate to buy? I'll talk about that a lot in the next coming weeks as well. So do subscribe to the channel, by the way. And if you want to invest into the stock market, have you picked the stocks right? Are you doing ETF investing? All that is really important, and you need to educate yourself. I have made a lot of videos on this channel on this, so do check those videos out, and I'll be talking about this in the subsequent slides as well. So that's preparation. Stop spending, build up capital, avoid debt, build up your credit score, and take these 3 months to educate yourself so that you are able to make the right moves. Now let's talk about the third thing in a recession, which is the collapse. When do you know that there is a collapse happening? We already have seen step 1 happening, which is people are losing jobs. So that's something that has happened in the tech companies more, but we are starting to see that in other retail-based companies as well. Canadian Tire, Lowe's, Shopper Drug Mart, all these big companies are also laying off people right now, and it's not just the tech. Once people lose jobs, what happens is homeowners actually feel the stress, and they are not able to pay their mortgage, and they start defaulting on mortgages. Even people who are not homeowners, they are tenants, and if they lose their jobs, they can't make rent, and therefore the owner of that house, the landlord, is not able to make payments, and therefore the mortgages cannot be paid. So there will be stress on mortgages that we'll see in the next few months. Third thing, and we have already seen that, but not just the big businesses, but the smaller businesses are also struggling because there's just not enough spending power. For instance, let's talk about clothing. I, as an individual, if I'm struggling in a recession, I'm not making enough money, I lose my job, I'll not buy the fancy clothes that I don't need. And as much as this recession impacts you, it impacts those businesses as well, and therefore all these businesses also start to collapse. That has always happened in a recession, and this recession will be no different. And what we'll see is a lot of panic in the market. Everyone will sell everything. And that's where you come in. Because you have educated yourself, we can actually profit off this panic. So let's talk about the fourth step, which is profiting. So me and Simran has saved almost about $250,000 in our bank account to profit from this recession. Now first, I was not very comfortable putting this number, but I really want to be transparent, and I want to show you how I'm planning for this recession. Now, like I discussed in the previous slides, money is not enough. You have to have a money plan. That was one of the rules in a recession in step number 1. So what I am doing with this $250,000 is that I'll be putting $50,000 towards stock. Now, I already invest about $2,000 a month, which is $500 weekly. I've talked about this in a lot of videos. But over the next 12 to 18 months, I'll allocate an additional $50,000 towards stocks. And the how part of it, I'll discuss in the next slide. The second part of my equation is real estate. Because I understand real estate well, I'm in the market, I get access to deals. Therefore, I have allocated 40% of this budget towards real estate. That means that I'll be buying one piece of real estate in the next 12 months. And the rest of the 40% goes towards business. Now let me break down these 3 asset classes one by one. First, let's talk about stocks. Now, I'll highly recommend that you read this book called Rule 1 Investing by Phil Town. The reason why I say that, and in normal circumstances, I would ask you to invest into ETFs, where you can invest your money slowly and it grows at 6 to 10% depending on the ETFs that you buy. I've made several videos on this. But Rule 1 Investing by Phil Town is a more advanced form of investing where we talk about reading a cash flow statement, reading a balance sheet, where you have to look at return on invested capital, sales growth rate, earnings per share growth rate, equity growth rate, and operating cash flow growth rate for the last 5 to 10 years in order to make a decision whether a particular stock is a good stock to buy or not. This is basically value investing where you're trying to decipher what is the right price for the stock to buy in a recession. Now, generally speaking, I'm not a huge fan of doing active investing into stock market, but this time I've actually gone back to the book. I read this again, and now I'm more confident of making a few moves in the market. Now, while you're investing in the stock market, remember the first 2 rules. Nobody can predict or time the market. So do it slowly, do it consistently, and do it over 12 to 18 months, and not doing in the entire 10, 20, $30,000, whatever you have budget towards the stock market, put into one stock or a couple of stocks at one time. Do it consistently over a long period of time. And the second one, the markets will bounce back. It's okay if your stocks go down in a couple of months. Don't be obsessed with where the market is going. Just be focused on doing it consistently in stocks that have long-term value, and make sure you do not panic and hold that stock for a long time, because again, the markets will bounce back. But honestly, if you are not into stock investing, if you don't understand numbers well enough, you don't really have to go through the book that I just talked about. And you don't really have to invest that way. And you can still make a return of over 8% in this particular market. And I can prove this to you based on the historic numbers of S&P 500, which are the top 500 companies in the US aggregated together. So this is the trend of S&P 500 from 1990s all the way to today. Now, if you entered the market just before the dot-com bubble in September of 2000, which is the peak of the market at that time, and you invested $1,000 every single month from September of 2000 all the way to today, every single month, $1,000 into the S&P 500, one index, $1,000 a month, every single month, without increasing or reducing that amount. Very straightforward strategy. You would still make almost 10% of year-on-year return. You invested at the peak. And let's say you invested at the bottom. Let's say you were able to time the market, and you were able to do that on September of 2002, where it was actually the bottom. No one could have predicted it. It was just the bottom then. 2 years later, you would end up with about 10.5% of year-on-year return. So it's not very different over the long term. So you don't really have to complicate matters. All you can do is just start investing today and do it slowly over a long period of time, and you will win. Now, you might say that this is a one-off case and this might not be true, but let's talk about 2007 and 2008 subprime crisis. Let's say you started investing in September of 2007. Again, I don't know what's up with September, but that's where we peaked, September of 2007 again. And if you invested every single month, again $1,000, you would still end up with almost a 12% return year on year. And this is again one index, S&P 500, over a long period of time, every single month, consistently $1,000. And let's say you were able to time the market and you entered the market on February of 2009, which was actually historically, pretty low part of the market, you will still end up making not more than 12.5% return. Again, if you do it over an extended period of time, consistently, the returns will still be pretty amazing. And you do not always have to get into the complication of going individual stocks. Now, I will be making a lot of portfolio moves over the next few months. So if you want to follow my ETF and stock portfolio, you can actually follow me on Blossom, which is an amazing social media platform for investors. It's completely free to download. You can actually connect your trading account as well. You don't have to if you don't want to, but if you do, you can actually look at all your portfolios. You can look at analysis, and not only that, you can check out my portfolio, what I'm investing in, the moves that I'm making. And the best part is, at least for me, that I can actually follow other influencers and see what they are doing with their portfolios. It's very, very transparent. Brandon Beavis is someone that I've always followed. I also follow someone called Joey Yang. She's also there on Blossom, and Canadian in a t-shirt. I'm pretty sure a lot of you know this, and he has over 22,000 followers on Blossom. All these guys have shared their portfolio. All these guys share their insights. So I highly recommend that you are on this platform if you are interested in investing. The link to download this app is in the bio, and do not forget to follow me on Blossom as well. Now, if you have been following me here, you know that I did a financial literacy workshop a few weeks ago where I talked about investing in one of the modules, and there we talked about which vehicles to use to invest into the stock market and which ETFs have outperformed both in the US and Canada over the long haul. If you missed this workshop, I will be launching it again on my website. It will not be a live session, it will be a pre-recorded session, but that will come in the next couple of weeks. So stay tuned for that. Now let's talk about the second asset class where I'm investing, which is real estate, $100,000 in the next 12 months. And I've made several videos on this. I've made a video on how to buy your first rental property step by step. So the link to that is in the description. That is probably the most risk averse way of investing those $100,000. I've done some riskier stuff as well. I'm potentially looking at US to invest those $100,000 because there will be a lot of deals that will come into the US. I've made a video on that as well. And I've also made a much more riskier way of investing that $100,000, which is infills, which is also there on the channel. All these 3 videos will be linked in the description below, and there'll be one more video that's coming up next week on the best way to buy pre-construction. That's the fourth kind of investment that you can potentially make in the next 12 to 18 months. I'll talk about that in my next video. So make sure that you subscribe to the channel so that you do not miss that video. Now let's talk about the third thing, which is business. And that's my favorite part right now. Because I am launching Grow Nation. I actually did a workshop already and I'm investing back into my business. I'm doing a mega event, which is a networking event of over 400 people, my coaches, my mentors, my business partners, my clients. Everyone will be there in person in Oakville, Ontario. I'm super excited. So I'm actually spending a lot of money on this particular event. And the reason is that I want to brand myself very differently. Not only this, but Simran left her job recently. And the reason is that we are building an app, which is a Grow Nation app. And this will be launched early next year. So I'm making some really critical and important moves in my business in the next 12 to 18 months. And this business will be an absolute win-win. Not only will this business help me increase my net worth, it will also help a lot of people who are part of this ecosystem to increase their net worths as well. And no, Grow Nation is not only about mortgages. Now I do have one last slide where I'll be talking about how to think of a six-figure business if you want to build one and use this recession to scale a business. But I'll highly recommend that you read these two books. The first one is 100 Million Offers by Alex Hormozi. I've used the blueprint that he used in this 100 million offers to launch the first Grow Nation workshop where I was able to raise $30,000 in just 7 days. There's no rocket science. All I did was read this book and implement it within a month. And the second book that I'll recommend is 100 Million Leads. I've again used the same blueprint to launch Grow Nation that you will see in the next 6 months. Now, I'm not saying that it'll be easy when you read these books to implement in your business because you might not have a business right now, but still I'll highly recommend that if you want to scale a business, if you want to start a business, I'll highly recommend these two books and you should download these. The link again is in the description below. And there's one more person that I absolutely love. For the last 12 months, I've been following her. It's Cody Sanchez, and she talks about building boring businesses, and I absolutely love her. I would highly recommend that you follow her as well. Now, my last slide, and this is something that I discussed in my financial literacy workshop as well in one of the small sections. Now, this will be up on our website next week, I think. I'm hoping. I was actually going to launch it on my birthday, which was yesterday, but I was not able to. But hopefully in 1 week's time, this will be up. You'll actually be able to see the entire workshop and consume all the content. But this is one slide that was actually very helpful in that workshop. A lot of people actually like this. So I'll talk about how to think of a six-figure business if you want to invest into one. Number one is that you need to look at the problem. Are you solving a frustration? For instance, financial literacy is a frustration amongst a lot of new immigrants. And that's where I really want to help people. And that's solving a frustration. Or are you solving a scarcity? So in my experience in winters, I don't see enough towing companies when there are so many accidents. I don't see a lot of snow shoveling companies for busy people like me who really doesn't want to shovel their snows. And the third one is solving rich people problem. For example, financial planners would want to solve a problem of how to invest people's money. Same way real estate investors and real estate developers have to allocate funds of their investors into different projects, and that's solving rich people problem. And those are the three things that I see have worked really well in the market. My rule of thumb is that we first need to identify how many sales do you need to make $10,000 a month, because I really feel that $10,000 a month is enough to not only leave your 9-to-5 job, but also to give you stability in your life and in your business. So let's say these are gross sales of $10,000 a month. Obviously you have expenses and taxes after this. Now, if you are making a $5 cupcake, let's say you make absolutely lovely cupcakes and you charge $5 for the cupcake, you'll have to sell 2,000 of these every single month. That's really hard to do, especially when you're first starting. Let's say I have a course of $100. I have to sell 100 of these courses every single month. Now, it might be a little bit easier for me to do it with my audience. However, it's not always easy to do when you're first starting out without a lot of social influence. However, for me, one mortgage is close to $5,000 in gross commissions. So I only have to do 2 to reach my target of $10,000. Now, I'm not asking you to be a mortgage agent. Please do not. Please watch my videos on what it takes to be a mortgage agent. I would not recommend. It's a highly competitive industry for anyone to join. I'm not trying to discourage you here, but I don't want this to lead you into something that you don't like. And that's why I'm putting this disclaimer. But again, you need to think of your business as what can get you to a certain amount and how many sales do you have to really do to reach that target number that you're looking for $10,000 in this case. And the second thing that you need to think, not just the price point, but the second thing that you need to think is, do you need 2x resources to reach $20,000? Let's say you want to scale a business of $10,000 to $20,000. Do you need to put double the time? For example, if you're doing Ubering, if you are, doing Uber Eats, or you're doing, skip the dishes, in order to make double the money, you'll have to double the time that you are spending. So that's not very scalable. However, in my case, if I'm doing mortgages or if I'm selling a course, I can actually hire salespeople to do all the sales for me and I do the fulfillment. That's very scalable and I don't necessarily have to double my resources to double my income. For example, people who build apps. If you build one app, if you build one system once, and you sell that system to a person on a subscription, you actually can make the money even if it's a small amount over a long duration of time. I'm not saying it's an easy thing to do, but people who have built really good apps with recurring revenue, they don't have to double their time or their resources to double their revenue. They can actually just double their resources and 10x their revenue. That's extremely scalable. And the third thing is your go-to-market strategy. For me, it's a 3-part strategy that has worked for me and a lot of people that I know. The first one is a free gift. For example, I'm making this YouTube video as a free gift. You're watching this, I'm not charging you any money. The only cost that you pay is your time. Then you need a product to prospect. What I mean by that is, let's say you have a coaching business or you give job coaching, let's say. And let's say you're doing a consultation call for $30 for 30 minutes. That's your product to prospect. For instance, if I have a course on my website, that's a product to prospect. Because it's just $100, $200. It's not my core product offering. It's just something that can get you into the ecosystem that I've built. For example, for financial planners, selling this insurance or a 1-hour financial consulting call will be a product to prospect. However, all these financial planners actually have a different core offering, which is they invest people's money, which is usually in hundreds and thousands of dollars, sometimes into millions of dollars, depending on how experienced the financial planner is. And that's where they make the most money off. For example, for me, mortgages is my core offering because mortgages is where I make the most money in. So whenever you're thinking of any business, whether it's a physical business or a service-based business, you need to think of a go-to strategy. And these are the 3 things, if you have that in your business, you increase your likelihood of success by a lot. That's all I have for today. I hope you got some insights around how to profit from this recession, and hopefully you are able to take a leaf from how I am diversifying my investments into 3 different asset classes over the next 12 to 18 months. So do subscribe to the channel if you have not done that, and do hit the like button because the algorithm only works that way. It will show this video to more people like you if you hit the like button, and I would really love to know from you what you like the most about this video in the comments below. मिलते हैं अगली वीडियो में, तब तक के लिए बाय बाय।